This is the MetaSignals Beta Long Strategies results Google Sheet. It's available in the historical results channel of the Discord. Before you trade the alerts, I highly recommend that you come and look at this data and understand the performance metrics of the different strategies and plan out in advance which strategies you'll be trading and which ones you'll be ignoring. I'm going to go through one strategy on one time frame and go through the different metrics so that you can better understand what we're measuring and what it means. So we're looking at the 45-minute power 1.01 strategy. There's 6 rows of data per strategy. That's because we have 2 methods of exiting with a loss. We have the close below method and the static method, which I'll come to in a minute. And then, of course, we have TP1, TP2, TP3 for each method. Close below versus static. So a static stop loss, most people are familiar with. I hope you're familiar with it already. Price touches your stop loss, you exit the trade with a loss. Simple. Our preferred method of trading the alerts is the close below method. On a 45-minute time frame, this would mean that price can come down and touch the stop loss as many times as it likes, but we don't exit the trade with a loss until there's a 45-minute close below the stop loss. We'll look at what this means for the long-term results, and you can decide which method is best suited to you. All of the data is based on a starting balance of $1 million and a risk per trade of $20,000. If you're not trading a $1 million account, just remove some zeros. $10,000 account, $200 per trade. $1,000 account, $20 risk per trade. The run ID is something that we use internally to keep track of all of this. You can ignore it. It's there for us. The total number of signals. So here we have 176 signals generated between the end of 2019 and the end of 2023. Keep in mind that a lot of these pairs were not listed on Binance at the end of 2019. So going forward, we would expect a higher frequency of this specific signal type. Let me get into win rate and the average win dollar, average loss dollar based on the close below versus the static. So you can see that TP1 close below method offers a 74% historical win rate versus a 56% historical win rate for the static stop loss method. The key difference is that, of course, with the static method, you know going into the trade, your maximum risk is $20,000. You can't lose more. With the close below method, there's no way of knowing your precise loss going into the trade because you're waiting for that close below. On average, for this strategy, the losing trade was a $37,000 loss. I should mention that if you're trading with the stop loss close below logic, you can set that up through our partner, AllTradey. I'll put a link in the description below, but that will allow you to basically set up the trade and then walk away. If there's a 45-minute close, in this case, below your stop loss value, only then will the trade be exited with a loss. You can also set up an emergency static stop loss in case of a black swan so you don't get completely annihilated. Let's look at the end balances and the total returns. So on TP1, the close below logic, over the lifetime of this strategy, we saw 145% return, which equates to a $2.4 million end balance if we're starting with $1 million. And you can see for this specific strategy, it goes up based on TP1, TP2, TP3. You can then compare that to the static stop loss and realize that over the long term, the stop loss close below logic gives you a far superior return. Now, this is where some people may say, okay, great. So the long-term result is what I'm looking for. Therefore, I'm going to go with the close below logic on the stop loss. And this is where we have to caution you to say, look, it's up to you to know yourself as a trader and know your own emotional predispositions and know your own psychology. If you're going for this higher long-term return, you have to put up with bigger individual losses. If you can't handle these bigger individual losses, then don't use the close below method. Use a static stop loss. On the static stop loss side, the returns are not as big as the close below, but they are still very solid, if I do say so myself. You can increase these returns by looking for a better entry than the price at the time of the alert. When you look for that better entry and get it, you can also move your stop loss down a little bit so that you're still risking the same $20,000, but now you have a deeper static stop loss, which should result over time in a higher win rate. Something to keep in mind too, if you're trading with the static stop loss, you may look at this and say, okay, I am most interested in the long-term result. Obviously, TP3 is offering the best long-term result. I don't want to put up with big individual losses. And what will be waiting for you is a 24% win rate. A lot of people intuitively think, well, 24% win rate, that's horrific. I'm never going to make any money. That's not true, because in this case, our wins are worth $120,000. Our losses are fixed at $20,000. So even losing the vast majority of the time, we come out way ahead. Again, you have to know yourself as a trader. Can you lose 76% of the time and continue on and be happy? Can you be happy because you understand the data and you understand the meaning of a long-term edge? If the answer is no, fair enough. Then don't target these TP3s with the low win rates. Target TP1. You'll feel better day to day. Your end balance might not be as much, but you're still going to be profitable. Again, this is something that only you can decide. We can't tell you what is the best way to trade the alerts. I mean, long term, the best way would be to go for the stop loss close below method, put up with losing 60% of the time, put up with very big individual losses, and come out on top. That's not going to be for everybody. We leave that up to you. Max drawdown is the maximum percentage drawdown from the peak of the P&L, 15 and 20% respectively. Not bad at all. Again, when you're in the moment, you need to understand the big picture. So if you had gotten up to $2 million and now you're down $300,000, are you freaking out, or are you saying, well, that's generally to be expected with this strategy? If it's the former, I would suggest that you need to rethink your approach to trading, because there's no up-only strategy. There's no up-only mode. You will draw down. There will be losing streaks. Time underwater is based on the $1 million starting balance. So in 4 years, we were only under $1 million for 33 days on the close below method and 108 days on the static stop loss method. Profit factor, Sharpe ratio, Sortino ratio, Kalmar, Kagar. These are all different ways of measuring the performance of the strategies. Different people are going to be more interested in different metrics here. So we'll leave it to you to Google and decide which metrics are most important to you. Average win duration, average lose duration, standard deviation win duration, standard deviation lose duration. We prefer to use the standard deviation. We find it more accurate. It's basically helping you understand how long to expect the trade to take to play out. If we look at a more extreme example down here, we can see the lose duration is 13 hours and 38 minutes. The win duration, 6 hours and 20 minutes. So how could you use this? Well, if you're going sideways, you're a little bit underwater, maybe you're in a little bit of profit, but you haven't hit TP1 and you're already on, say, 9, 10, 11 hours past the time of the alert. You can use that time element to start to consider just cutting the trade, because the more you get past this 6 hour mark, the more likely it is to turn into a loser. Best P&L, worst P&L percentages. This is the actual percentage move of price on the chart. You can see with the 45-minute, we are going for, on TP1 especially, we're going for very small moves. We're going for the best TP1 of this strategy went for a 1.27% move. The best TP3 went for a 10% move. You can also see what it does to your worst P&L in terms of the move of the price when you use the close below method versus the static method. You're going to take much bigger losses, as we discussed. win streaks and losing streaks. Keep in mind that this strategy here provided the best long-term P&L, the close below on the take profit 3. You also had to put up with 11 losers in a row. The static method also provided a decent long-term P&L. You had to put up with 24 losers in a row. This is why we say again and again in the Discord, you have to manage risk and you have to keep the big picture in mind. This strategy produced a great end balance with a minimal drawdown, and it produced 24 losers in a row. If you can't handle the 24 losers in a row, then look for strategies where the maximum losing streak was much less. Perhaps something like the close below method with the TP1, where there was only 4 losers in a row. Again, MetaSignals is all about the long-term edge. You can only benefit from a long-term edge if you have chips to put on the table, right? So we recommend something like 0.5% of your account up to maximum 2% of your account risked per trade. Once you have 12% of your account at risk in open trades, stop taking trades. That's our suggestion. You can do as you like, but you can see if you're betting 10% or 20% of your account per trade, you're going to blow it up long term. Some other metrics that we added here after releasing version 2, which a lot of people had requested. We have the ratio wicked stop loss before take profit. So TP1, TP2, TP3. On TP3, 40% of the alerts actually touch the stop loss before going on to hit TP3. The average percentage move towards stop loss and standard deviation move towards stop loss before take profit. This is telling you very clearly, average and standard deviation, that in general, there's no need to rush in to the trade on this time frame with this strategy. In general, we move 70% on average, 83% standard deviation towards the stop loss from the entry before returning up and hitting TP1. If you were targeting TP2, that number goes to 90% on the standard deviation. 102% means that actually on average we went past the stop loss, below the stop loss, before finally going up and hitting TP2. What this is telling you is that you have time to find your entry on this strategy. Yes, there may be some times when the alert comes, price goes straight up, hits the take profit level, but in general, you have time. You can find that better entry. You can plan the trade. You don't need to ape in.